Ladies and gentlemen, good day and welcome to Goldiam International Q4 FY23 conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will remain in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you and over to you, sir.
Yeah, hi. Thank you, Kelvin, and good afternoon to everyone. We're delighted to host the senior management of Goldiam International with us. And we have with us Mr. Rashesh Bansali, Executive Chairman, and Mr. Anmol Bansali, Whole-Time Director of the company. I would now like to invite Mr. Rashesh Bansali to make his opening remarks. Post this, we'll open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Rahul. Good afternoon, everyone. Thank you all very much for joining Goldiam's earnings call for Q4 and FY23. I hope everyone is keeping well. Let me give you a perspective on the industry. As you know, US is our largest market where we supply fine jewelry to large US retailers. USA has been witnessing a record high of inflation coupled with high interest rates. These factors have resulted in multifold increase in mortgage payments, lending to a squeeze on discretionary spending among mid-income segments in the United States. This, along with other geopolitical headwinds, affected sales of fine jewelry in FY23. The second half of FY23 and Q4 particularly saw US retailers undertaking a large-scale destocking. Goldiam had to partner with key retailers in inventory realignment exercises by running strategic discount programs. This impacted margins during Q4 FY23. Goldiam was early to respond to the demand headwinds and reworked its strategies to minimize any major impact on operations. A few factors that helped us protect and enhance the margins, including the company's ability to source natural diamonds strategically, the increased focus on lab-grown diamonds, and an omni-channel business model. The combination these helped us achieve 36% gross margins for FY23 as against 31% in FY22, with the company's FY23 EBITDA margin remaining healthy, growing to 22.5%. Lab-grown diamond jewelry sales have also sizably added, enhancing our company's overall profile as an integrated jewelry source amongst large retailers. Share of lab-grown jewelry in overall mix stands at 23% in FY23. We are seeing an increasing traction in and demand transition to this category, with FY24 slated to be a year of specific significance due to strong consumer adoption. While this category has faced some price erosion in FY23, we believe this has bottomed out as on date, with Goldiam being well placed to ride growth due to its integrated nature of operation. Talking about Goldiam's digital business, the online deliveries which helped us in quick working capital based turnaround with advantages of our rapid delivery, allowing us to be competitively intense in this category. Our strong delivery mechanism resulted into 100% fulfillment of its on-time delivery within 7 days of all its e-commerce orders. The company's balance sheet continues to remain healthy with current consolidated liquidity position. Cash plus investments, of course, stands at 256 crores, sizably growing in the year. As you know, FY23, we have already distributed dividends to the tune of 21.5 crores and we have now proposed a buyback of 32.5 crores for 2% of the equity of the company to be bought back. As for the outlook, although the economic situation in the USA hasn't completely stabilized, some green shoots are visible. We are looking forward to the upcoming festive season with optimism, with current open orders of close to 100 crores. Goldiam is on a transformational journey. The company's focus is in transition further into lab-grown diamonds and e-commerce sales, which are healthier and more profitable business models with consumer tailwinds. We remain buoyant on journey of lab-grown and it's becoming more popular among young consumers, and the management is evaluating various omni-channel strategies to make an early breakthrough in the domestic market as well. With this, I would like to, open the floor for questions. I now would look forward to have an active interaction with all of you all. Thank you for listening.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsh Shah from Dimensional Securities. Please go ahead, sir. Mr. Harsh, your line has been unmuted. Please go ahead with your question.
Yeah, sorry. Good afternoon, sir. My first question is more on the bookkeeping side. What will be the ticket size for natural and lab-grown diamonds for full year FY23?
So FY23, we believe that we will continue to do 23 to 25% of lab-grown diamond jewelry sales.
No, I meant ticket size per order for LGB and natural diamonds.
You mean the order book?
Ticket size of 1 unit.
Hello? Yes.
Yeah, ticket size of 1 unit. Average ticket size of 1 unit.
Value for lab-grown diamond jewelry, as per last year, was about $1,100, and for natural diamond jewelry, it was $530 per piece.
So LGB is almost twice that of natural diamonds.
That's correct.
So to follow up on this, as you mentioned that you're seeing these macro headwinds which are impacting discretionary spends, then what is it that people are still preferring LGBs worth almost twice that of natural diamonds? I mean, you're seeing strong growth there, but not on the natural diamond side.
So I'll tell you what is happening in the industry. People are preferring to buy lab-grown diamonds jewelry right now because the natural diamond price of the jewelry for the same styling is 10 times more price. So they're preferring to spend less money. But even if they're spending double the amount of natural diamonds in that scenario of the look, they are actually getting a lot of strong savings. So that is why they're preferring lab-grown diamond jewelry.
If I could also add on, this is also a phenomenon of Goldiam's strategy within lab-grown diamond space, where we are growing our own centers, so we are able to focus on jewelry that is higher end within the lab-grown space on the bridal market as well. This segment was not addressed by us in the natural diamond jewelry space. So for us, it in particular for Goldiam, lab-grown is actually a higher ticket item than natural diamond jewelry.
Okay, got it. That's helpful. And on the competition side, I mean, there is this entire Surat and the South Gujarat belt which are involved in growing LGBs, and a lot of new players are coming up in the market. So what kind of competitive scenario are you seeing? This year we saw sort of 30-35% price erosion in LGBs. So going ahead, what is the outlook on both competition as well as the pricing part?
Anmol, you want to take this?
So I can answer that. There is definitely a lot of capacity that's come up in the growing side of the business in terms of lab-grown growing within the Gujarat and Rajasthan areas. For us, we have always historically seen distribution to be the main factor that will determine success in the lab-grown field. In our industry, we think that distribution really is the only sustainable and long-term key to creating additional value and additional margins within our industry. So if you see, even in our operation, we have focused on doing 100% captive consumption so that we can gain the benefit of additional margin in jewelry. Not just that, we have focused selling lab-grown diamond jewelry where all the centers are grown in-house at Goldiam itself. We have focused on selling this not to wholesalers but direct large retailers in America. This has allowed us to gain prominence, visibility among these retailers who now believe that Goldiam is offering an end-to-end product suite within the category of lab-grown diamond and lab-grown diamond jewelry. And it also helps us from the perspective of additional margins on the lab-grown side of the business. We are able to capture every margin component in the supply chain from growing right up until jewelry distribution to retailers. So that is what is going to be the long-term sustainable differentiator for all companies in our industry, and I think that we have always focused on on distribution rather than just growing capacities without locked-in sales.
Okay. And one more bookkeeping question. Our operating expenses, this line item has grown from 10 crores to almost 19 crores during the quarter. And is there any one-off, or what would the reason behind that?
Let me get back to you on that.
Sure. And just one small request. It would be of really help if you could, give this split of natural LGD and raw LGD on quarterly basis. You're giving it on annual basis, but
Yes.
it would be helpful if you can give it on quarterly basis as well.
We will keep that in mind going forward.
Yes. From Q1 of the next financial year, we'll be giving a quarterly split on lab-grown jewelry versus natural jewelry.
Fantastic. That would be helpful. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. We shall move to the next questioner. Next question comes from the line of Dixit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. My first question is regarding the demand scenario in US. So as you have mentioned that over last quarter we have seen some of the retailers are looking at discounting the products. So do you expect it's more or less over, or still 1 or 2 quarters this phenomena will continue and we can expect some pressure on the margins over next couple of quarters as well?
Mr. Dixit, I think more or less our partnership with all these retailers is on a continuous basis. We believe that the economy in America is not favoring the sales of diamond jewelry because of all the issues that are there in terms of what I just said in my speech. So in case if we do have to partner with them for another quarter or 2 quarters, we prefer to do so looking at the future post that. We don't believe this is impacting margins dramatically going forward because we've already realigned margins and now we are working towards it. So I think margins will improve from what you have seen in the last quarter.
Okay. And, your discussion with your clients, do you foresee that some demand to, come back by the time the season starts, say, around from September to December?
Yes, that's always the busiest time for Christmas sales and Thanksgiving sales. So we definitely believe that a good order book and a healthier order book position, right, will be received by the company very soon. Currently, we are sitting on a 100 crore open order book, which we'll be delivering in the next 3 to 4 months.
Okay. And just regarding this order book, so we do give the notices of we have received the order and all.
Correct.
What I understand is we sell to the retailers and it remains on our inventory. And whenever an end customer purchase from the retailer, we record the sales. So how does this then orders play out?
Okay, so that is not what the order book is all about. The order book is all about asset sales as well as new test memos that we are doing, which is exactly what you told us. But that is only on 20 to 25% of the order book where new tests are happening. The rest of the 75 crores of that order book is absolutely on 100% buyout.
Okay. 75% is 100% sell.
Yes.
So even if it does not get sold at their end, it's recorded in the sales for our side.
Because it is sold by us.
Okay. Now, second question regarding as you mentioned that we are evaluating option for lab grown in India. First thing, are we going to, look at the fashion jewelry or more focused towards the high value bridal wear? And secondly, can we expect something in FY24 or it may take some more time for studying the market and may happen in FY25?
I think market studies are currently going on, and I think we're looking at FY24 or the end of FY23 to give you clear information and some concrete showpiece on this thing. Anmol, you want to take this further?
No, I think that's fine.
Okay, and it will be more of a fashion jewelry or a high ticket bridal wear type of?
So the interesting thing about lab grown is that we will be using solitaires in our presentation to the Indian consumers, because the cost of solitaires with our fully backward integration, right, we will be enhancing our own margins when we sell domestically. So I think we'll be looking from mid market jewelry segment, anywhere from the price point of 25,000 rupees retail all the way to 4 lakh rupees retail should be our price point.
Okay. And one last question. We are reading articles on some sanctions on Russia or any like that. So are we facing any availability issue for the rough diamond on the natural side?
Yes, absolutely. That has been another important reason with this geopolitical risk, right, and sanctions of Russia and dollar payments to Russia. So the Alrosa, which is the largest trading and mining company, which distributes rough diamonds to all Indian cutters and site holders, are unable to sell their rough to India or anywhere else in the world coming to India due to these dollar payment issues. So because of this, there has been non-availability of enough rough diamonds for the market, right, which has increased prices of natural diamond polishes. And because of this, also retailers have slowed down their issuing orders, because they believe that this pricing is not sustainable.
Okay, that's it from my side. Thank you.
Thank you, Mr. Dixit.
Thank you. The next question comes from the line of Kaustav Das, an individual investor. Please go ahead.
Hey, hi. So I just wanted to know, what do you think would be the growth approximately 1 year down the line from the US? And my second question would be, I just joined a bit late. So for the Indian market, are you trying to go through like your own stores, or would you be partnering with the big brands of India? So just wanted to know on these two lines.
Currently, Mr. Kaustav, the business is in a consolidation phase. Right, so we are looking to consolidate margins and improve that even with temporary slowdown in business. But next year onwards, I believe that once the direction of lab-grown diamond jewelry versus natural diamond jewelry and the geopolitical risk is down, we believe that business will go back on its growth trajectory post next year onwards.
So you mean around 20% revenue growth?
So right now it's too early to predict what will be the revenue growth. I only firmly believe that we'll get back on our growth trajectory.
Got it. And on the India front, if you could just answer that.
Anmol, you want to take the India front?
Sure. We're still in discussions, so it's a little preliminary in what to answer. I think we'll be able to get back to all analysts and all investors maybe in a Q2 conference call. But in terms of specifically to your question, we're considering setting up retail ourselves.
Okay, thanks a lot.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Nikhil from Perpetual Investment Advisors. Please go ahead.
Yeah, hi Anmol and Mr. Bansali. So I have two questions. See, while US is witnessing some slowdown and it might last for a while, and India, looking at India signing trade agreements with a lot of countries now, are we looking at other geographies which can be equally sizable or quite sizable for Goldiam going forward?
Mr. Nikhil, we understand the slowdown, business consolidation, and we understand the need to increase geographies for the company. We are looking right now at a couple of new geographies. One is UAE and the other one to be Australia.
Got it. And are these markets, I mean, in terms of consumption, equal to US per capita, or this would be more of natural versus lab grown?
No, so the UAE market is completely natural diamond jewelry market. Lab grown has yet to, get stronger in that area. While Australia, the lab grown has started peeping in, and we will have to, go there and, get some clients and start that business very soon.
Okay. And like a lot of participants asked earlier, while there are several manufacturers of lab-grown diamond within India and outside India, is there a way to differentiate in terms of the process of manufacturing?
I can answer that. So there are two processes of manufacturing lab-grown diamonds. Most large diamonds, which when I say large, I mean 1 carat and larger. Most diamonds of that size are grown via the CVD process, which is the same process that we use at Goldiam. Within that, there is no way to differentiate diamonds, in terms of the formula for growing or any such thing. Some manufacturers may be growing poorer quality and may not have, great consistency with their production. We have reached a stage where we are, going to very well commercialized US quality diamonds, and we're very happy with our production at Goldiam in terms of diamond growth.
Got it. So I actually meant in terms of yield per machine, in whatever way you calculate, maybe carats per month or anything.
Oh, sure, absolutely. So not really. I think it all works out to this. It all works out to the same levels. Some people may be growing faster, but that comes at a cost of weaker colors and weaker production growth. For us, we focus on a consistent high quality of diamond growth and trying experiments to push the yield per machine per month upwards as much as we can. So at the moment, I think there is no major difference in terms of yield per machine.
Got it. And so, see, the inventory days have moved up quite significantly, and you sort of answered that in some of the earlier questions, but when do we see them normalizing again, like over what period, just for the sake of modeling?
I think we look at next year to be a stronger year for the company, and because it will take 2 to 3 quarters to play out the consolidation phase.
Okay, so we see inventory moving back to somewhere between 2 to 3 months over the next 1 year.
Yes. I think the focus that we'll personally have to do this year is to reduce inventory and then move forward. But also you see the company's lab-grown diamond business has been relatively a newer business since the last 2 years, right? It has impacting and it's been showing in the balance sheet that it's a stronger and a better business to come in. Now, when you see the inventory numbers, you have to also understand that when we are growing our own stones and when we are doing e-commerce businesses, we have to have inventory ready in the company to deliver between 5 to 7 working days. And as Mr. Anmol pointed out to one of the answers to the earlier question that our ticket size in natural diamond jewelry was $500 and lab grown is $1,100. Also, that's another reason why inventory seems to be increased, because your ticket sizes have increased as well.
Got it. And so, currently or maybe last year, the breakup in sales was, for the current order book, the breakup is, 20-25% is maybe test sales and 75% would be pure buyout. How was this, how has this trended historically?
It's been on similar lines historically.
Okay. And one last question is on tax rate. So it has varied from 30% to, we are close to 28% now. Any guidance on what can it be going forward?
The tax rate, the tax is the corporate tax of the country is what we are,
Okay, so it's 25 and
yes.
25.2 or 25.4,
Exactly.
but
Exactly.
for the last few years it has been higher. That's primarily why I'm asking that what can we expect going forward?
No, I think you'll see around 25% going forward.
Okay. So another question is, while the plans for domestic market, it may be in the works yet, but anything on the size of investment that would be required for this?
Anmol, you want to take this?
So I think similarly on the same lines, we will be evaluating and getting back to you on that, maybe in the Q2 call. For us at the moment, it's, we're considering the mode of entry and, I think beyond that, we will have to get back to you after a quarter or two.
Okay. No problem. Thank you, Anmol. All the best.
Appreciate it. Thank you so much.
Thank you. The next question comes from the line of Dixit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity again. Can you elaborate slightly on the response on the jewel fleet?
Sorry, could you repeat that?
Response on the jewel fleet we launched last year for the mom and pop stores.
Sure, correct. So we are working with wholesalers, with one particular wholesaler to distribute orders through the website. They've taken it on and they are using it both to order and for catalog, showing it as a catalog to retailers and ordering offline from the website. I think the requirement for our learning has been for mom and pop, for independent jewelers. There is a strong requirement for terms and pricing terms, which of course the website cannot offer, but is being offered offline by our wholesaler. So we're working with them and growing that business steadily. Moving forward, we are not investing any capital in developing the website further and just adding styles to help them display and sell more product.
Okay, so we'll more or less will be growing there through the wholesaler model, where the wholesaler will.
It'll be more like a sales tool to help the wholesaler sell more of Goldiam product.
Okay. So because just one thought. So if we are present in the US and currently most of our sales comes through that would directly partner with the retailer, and our sales in absolute term in the natural side is around 400 crore. If I look at the size of the US market, it will be like billions of dollars. So over next 4 years, 5 years, do we see that despite the slowdown in the US market, we have a huge opportunity to grow? So our growth rate, should not be too much related to the economy of the US, given the size of opportunities such large, and we are very small player in that.
I'll forward that question to our chairman to give his thoughts as well.
Thank you, Mr. Dixit. So, our growth rate actually really doesn't depend on the size of the opportunity out there. The growth rate really depends on what is selling in the consumer showcases and what the retailers expect Goldiam to partner with them and make the design. So we have a very capable design development team. We keep making designs, and as and when the retailers choose those designs, is when the growth actually comes in. We also expect, the economy to improve for more and more people to have confidence and extra incomes or discretionary spends to go up. Currently, as you are well aware, these discretionary spends are not happening in America, and and that is something that is hurting us. So I think going forward, once these things are settled, things will get back to normalization.
Yeah, but is there a scope for adding more retailers or increasing our wallet share with the same retailer?
Yes, so we do believe that increasing wallet shares with the existing customers is the best way to grow, right? By adding more and more retailers, we will be creating competition in our own design banks between the two retail organizations. So we prefer to be working with the top 5 or 6 retailers in America, and we will be looking forward to grow our wallet size with them, whether it's natural diamonds, whether it's lab-grown diamonds, whether it's bridal jewelry, or whether it's fashion jewelry or bands or tennis bracelets. So we will be looking to increase our wallet size with each retailer, right, as well as the ticket size with each retailer.
And last question, some other participant has also asked, the other expenses has gone up from 10 crore to almost 19.5 crore this quarter. So if you can answer that. Thanks.
Yeah, I will get back to you ASAP on that.
So, okay. Is there a thing like whenever we offer a discount, the discount comes in that line item?
No, let me get back to you. I don't want to give you a reply which may not be, the reality or the truth.
Sure. Thank you.
Thank you.
Thank you. The next question comes from the line of Drashti from ThinkWise Wealth Managers. Please go ahead. Drashti, your line has been unmuted. Please go ahead with your question. As there is no response from the questioner's end, we shall move to the next question. The next question comes from the line of Kaustav Das, an individual investor. Please go ahead.
Hey, just a follow-up to the original question that I asked, like how would you expand in the retail market in India? I was just having this thought that like any other big players in India, like Tanishq or all, so they would be also able to produce lab-grown diamonds. As like I remember you sometimes had told that the machines are not that expensive. So is there any moat that will help us protect when we try to explore the Indian market, or is it going to be just our distribution network that is gonna help us? Like, is there any moat that you think will help you to expand in the Indian market?
Anmol?
So I think, of course, machinery and having an end-to-end capability direct to retail is something that is very exciting. In the long term, however, it is our opinion, and this is the reason for why we are considering India as a destination in which to sell diamonds. We think the opportunity size is very large, just from the strategic standpoint of the country, the way the incomes are growing, and the price points at which people are buying studded jewelry. Evaluating competitors that are also currently already in the landscape within the natural diamond jewelry section, whether they're brick and mortar only companies or omni-channel companies with a large online presence. I think there is we see there to be some scope and a sizable opportunity available for us to, not just compete, but also for an ecosystem or a market to grow with multiple such distribution for lab-grown diamond jewelry in the country. I think that's the current opportunity.
And just one more thing that I wanted to ask. So how do the big companies in India operate in case of lab-grown diamonds? Do they receive it from do they have customers like you from where they retrieve the products, or do they produce that in-house? Like, if you have any idea.
If you can just explain what you mean by big customers, or
so So I mean, suppose the likes of Tanishq or suppose the likes of PC Chandra in West Bengal. So they are big on jewelry or diamonds. So if they want to sell lab-grown diamonds, so how are they procuring it, or are they creating it in-house, just like you guys at home?
Sure. So good question. At the moment, there is not a single large organized retailer in our country that sells lab-grown diamond jewelry. They are only selling natural diamond jewelry, and in terms of lab-grown, there is no large organized player with pan-India presence that is in the market at the moment.
Okay. Thanks a lot. I really hope that you guys make it big in India.
Thank you. Thank you for your wishes.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Yatin, an individual investor. Please go ahead.
Yeah, thank you. So my question would be, which is, I guess, partially already answered in terms of high inventory this year. So, but just another point of view, is it because of currency USD issue also that we can see, is that also impacted there? And the next question would be, do we have any other use case in terms of lab-grown diamonds? So as of now, we are just looking at jewelry, and so do we have any other use case, or maybe example which could be used in other items like maybe in a phone, or maybe any other use cases? Want to know if you could show some light on that.
Sure. Let me address your second question first. So we are growing gem quality lab-grown diamonds, and our technology and machines, theoretically, it can be used in other applications also, but none of this is available on a commercial scale, and research and development is still many years away. So our full focus is to address the opportunity in front of us, which is within the gem and jewelry use for lab-grown diamonds. Sorry, if you could repeat your first question, we could answer that as well.
Yeah, thank you. So my first was in terms of inventory. What's the reason for higher inventory? I guess partially you have answered that it's because of lab-grown diamonds kept for the online business, but does it also include USD dollar impact?
Yes. So I think the main reason for the higher inventory, as was mentioned by our chairman, was the inventory held, for e-commerce as one requirement, and also the requirement to consign a certain amount of lab-grown diamonds with retailers in the US as this new industry category gets pushed into their stores. So these are the two main reasons for the high inventory this year.
Yeah, thanks. But just a follow-up question. If you also can tell how much is the online versus offline sales of total what we have in the area?
Online versus offline, sure. I can give you that figure. Online, I think in-store in total for the previous year, we completed about 74% of our sales were installed, and the balance 26% was online.
Okay. And what more things we are taking to make sure that we can increase our online? What strategy do we have for the next year? Anything you have in particular?
Great question. We're very focused on increasing our online business. We find it to be a strong moat and a strong cash flow generator for the company. So we are focused. Right now we've come off 2 very strong years of the business online, growing very fast. To give an idea, I think just 2 to 3 years ago, this was in low single digits as a percentage of our overall company revenue. And I think, the consumer adoption, thanks to COVID, for fine diamond jewelry and purchasing fine diamond jewelry online has been very significant. I think this year we should be looking to maintain and slightly grow that mix of online versus offline, and hopefully with the overall pie stabilizing and growing from here. Our focus is going to be also to increase more and more assortments for lab-grown diamonds online, thanks to the AUR being higher for Goldiam as for lab-grown diamonds as a category as a whole. I think naturally the online segment will also pick up in the total sales mix between online and offline then.
Yeah, thank you. So just last, I know which brand name we are selling online. Is it the Goldiam only, or do we have any other? We have made a specific brand for our online selling.
Great question. All our online sales are B2B online sales, so we sell through our retailers' websites. So, for example, some of our large retailers like brands of Signet Jewelers, Walmart, JCPenney, etc. On their websites, we list our products, and sales on those is what is counted over here.
Mr. Yatin, we request that you return to the question queue for follow-up questions. The next question comes from the line of Vineet Gala from Xylem Investments. Please go ahead.
Hi, sir. So just a follow-up on what the previous participant had asked with respect to inventory. So what would be the quantum of our inventory at the client stores? And in your experience, what is the aging to that we see in this inventory in the slack season, that is X of Q3, like before Q3?
Sure. Thank you, Vineet. I think that we can get back to you after the call. We'll pull the numbers out of our inventory at stores and the agent for the same, and we can email it over without a problem.
So just a ballpark number, like of the 250 crores of inventory that we have, what proportion would that be? Like, I just want to know the ballparks.
So just approximately, I think over 85 to 90%, 85% plus would be sitting in stores.
Perfect. Got it. That's helpful. So my second question is, if you could articulate on the supply side capacities with respect to the seeds, like who are the largest players, how do we source, what are the pricing trend recently, that would be really helpful.
This is with respect to?
Seeds.
Diamond seeds.
Perfect, yes.
Yeah, so this is the raw material for lab-grown diamond growing. We are sourcing our diamond seeds completely from companies abroad. We have suppliers in Japan, Turkey, and Germany as well. These are the large companies from which we are supplying very well-calibrated laser-cut diamond seeds. The pricing has more or less been stable, and we've seen about a 15 to 20% drop in diamond seed pricing over the last 4 months, with our expectations and through long-term contract negotiations as well.
So for a new player, is it easy to source these seeds, or like is it equally? So how does that work out for any new player who is coming out with LGD manufacturing capacity?
So I think it would be it's available to source. There's no constraint with regards to sourcing LGD seeds.
Perfect. So, and my last question is, I just wanted one clarity. Do we sell loose LGD?
We don't. Over almost 99% of our products will be completely integrated and sold in jewelry to US markets.
So, but like, do we have any capacities? Like, what is the capacity utilization in our LGD manufacturing part?
All machines are operational 100%, and we're utilizing, at full capacity.
Perfect. Okay, that's it from my side. Thanks a lot, sir.
Thank you so much.
Thank you. The next question comes from the line of Drashti from ThinkQ Wealth Managers. Please go ahead.
Thanks for the opportunity, sir. I'm relatively new in this company. So when I look at page 17 of your presentation, you've given the breakup of your product portfolio, your region, your sales channel, and your customer breakup. And you've given your EBITDA margins in each of the products. So I just wanted to clarify, is this gross margins or EBITDA margins? Because our EBITDA margins are lower if I have to look at these EBITDA margins, then the number comes very high. So these are gross margins that we've mentioned.
Drashti, I'll have to get back to you with, after reviewing the corporate profile again. We are in the process of updating it for new financial year. If you email me and email us at the company, then we'll be able to give you the exact breakup and details.
Sure, sir. Sure. Thank you. And also, in our sales channel, I wanted to understand, are our margins way different in the traditional versus the e-commerce channel?
No, the margins between traditional and e-commerce would not be very different. We get slightly more for e-commerce, but that's marginal. The main difference is that the working capital required on the e-commerce business is far lower. So from the perspective of, return on capital invested and our ROC, focusing on e-commerce is always, much better. E-commerce business is going to be a net working capital negative business. So effectively we get paid first and then our payments for raw materials are due in the market.
Understood. And in terms of product portfolio, if you could give me some sense on the gross margin, because here what is it's mentioned, it's not tallying to our actual numbers. So if you could just give me your overall sense on the gross margin.
If you could email me, the specifics, we'll get back to you.
Thank you so much.
And break it down by product category as well as distribution category with the exact FY23 numbers.
That will be helpful. Thank you so much.
To give you a little bit on the gross margins, the company has achieved 35-36% gross margins.
Yeah, total level. Sure.
Thank you. The next question comes from the line of Kushal Shah, an individual investor. Please go ahead.
Yeah, hi. I just saw the last year's budget, the FM speaking about the lab-grown diamonds, and she has announced some benefits for the import of this particular raw material for the lab-grown diamonds. So are we planning to reap any benefits out of that?
This is with regards to what was announced by the government?
Yeah.
So what the government has announced is a duty reduction on diamond seeds, which is a raw material for the diamond growing process. As our diamond growing laboratory is located in an SEZ, in the seeds SEZ, we anyway have historically not paid duty on importing diamond seeds because everything effectively is exported. So there's no net change or net effect for our company.
Okay. Second question is regarding our this sales, particularly coming from the USA. So I was just looking at the presentation. So is it like we are very much dependent on USA, and are we looking to explore more of the territories?
Sure, that's a great question. So the US is the largest market for jewelry in the world. More than anything else, not just about its size of opportunity, but on a per piece and per unit basis, they consume more diamonds than any other region in the world. Even in terms of structure of the market, most of the market, or almost entirely now the market sits very strongly with organized retailers. About 40 to 45% is with independent mom and pops, and we service that market through wholesalers. And the balance is with large corporate retailers in America. So it's a very well-structured market in terms of the customer base. The per unit profitability, per unit margins will be higher because of the diamond component being higher per piece compared to the rest of the world. And overall, the size of the market is the largest among any other region in the world. So these are the reasons which make the US one of the most attractive and most lucrative markets for a company like ours. Of course, though, we certainly understand regarding your question regarding diversification, and as mentioned by our chairman, we'll be evaluating options in other regions this year as well.
Okay. And my last question, sir, is regarding the buyback price which has been announced by the company. So last year it was also a surprise, and this year also it's a surprise. But any reasons for such a steep drop in the buyback price?
Sorry, could you repeat that question?
Yeah, it's regarding the buyback price. So the last year, the buyback price that was announced, that was also a surprise, and this year is also a surprise. So any specific reasons for the steep drop in the buyback price?
I'll let our chairman add in thoughts over here.
Yeah. Well, you see, the company continues to do buyback virtually every year, 2 years, right? And the buyback price is decided by the board, right? And the board feels that we are able to buy back 2% of the equity very easily at that price, and that is the reason why the buyback price is determined with a certain exercise with the average pricing in the last 6 months as per some rules and norms of which have been laid out.
All right. Okay. Fine, sir. Just the reason for this question is just because it's like last year it was valued on a 20% premium, and this time it's just valued at a 2% premium to the market price. So that was the specific reason just for asking this question.
Well, I believe this is the time, since it's the phase of consolidation for the company, right? So the company should be able to conserve some more cash for future expansions and still continue to give out good dividends and do buyback virtually every year or 2 years.
All right. Thanks for the question.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining in this call. We look forward to your continued participation. If you have any further queries, please reach out to our investor relation team. I would like to thank Monarch team for hosting this call, and a very good evening to all of you.
Thank you so much. Thank you to the Monarch team and all participants.
On behalf of Monarch Networth Capital, that concludes this conference. Thank you for joining us, and you may now disconnect.